Hello and welcome back to White Collar Woker. So what are we talking about today? We're talking about the fact that millennials are not going to pay for this debt. We seem to have a magic money tree economic theory running through both the US and the UK at the moment, the Federal Reserve and the Bank of England, and the MMT, the modern monetary theory as its economic name is, but it's actually really the magic money tree. Economists like Mark Blythe, Keane and a few others are saying that deficits don't matter, and that actually the government can print as much money as they want because they don't owe it to private individuals, they owe it to themselves. So if you control a currency, the Bank of England controls the pound, and if you want to fund fiscal stimulus, it's called, when the government just gives people money, in the US especially, it's not happening so much in the UK, but if that happens then it doesn't matter. And in fact, that happened after the 2008 financial crisis. It's called quantitative easing, which is actually shoring up the reserves of the private banks. If you do that, then it doesn't matter if those loans don't get paid, they get written off. That can only last so long, and let me explain why. The wages of young people need to rise in order to pay for hard liabilities that are happening in the future. There's going to be an enormous strain on the NHS, the state pension, national insurance and the welfare state. And the people that pay for that, there's no fund, there's no sovereign wealth fund in order to pay for those. That is the tax receipts of the future. Now, if wages don't go up enough, and I have a sneaking suspicion that during 2008 and in 2020, it was young people and it was people in insecure work, especially in 2020, their wages were the ones that have been hit. And also GDP has been hit, and there will certainly be an enormous amount of scarring from the 2020 economic impact. If people don't get higher wages, then the tax receipts will not be high enough in order to pay for those liabilities. There's huge pension deficits in the public sector. There is huge deficits in council payments. And there's huge deficit in the state pension if wages don't go up. The government doesn't seem to understand they can print as much money as they want, but if wages don't go up, there will be no NHS and there will be no state pension at the end of it. Now, there is a way to fix this, and they can inflate away the debt. And that's certainly what democracies have done in the past. After World War II, the debt to GDP ratio was 250% for the UK. It was something like that. It's quite close to that at the moment, but let's gloss over that. So how did they get rid of it? Well, they grew. They made sure everyone got a job, and they grew. And in fact, by the mid-70s, the debt to GDP ratio was actually 50%, and it's been gradually climbing from there. So let's say that the UK government does that and they manage to inflate away the debt, and the whole world comes to a new Bretton Woods, and the whole world manages to inflate away this debt, which I think they might succeed in doing, and certainly a lot of fund managers and economists think that's going to happen. The snag that I think is going to hit this is Bitcoin. This is not a Bitcoin channel. I'm not telling you to go out and buy Bitcoin. I did buy Bitcoin in the past, but I don't have a Bitcoin position at the moment. The reason why Bitcoin is really important is not because of the fact it's really valuable at the moment. I personally think Bitcoin is in a bubble, but this isn't an investment channel and this isn't investment advice. The thing that's really interesting about Bitcoin is that governments cannot control that currency. Now, at the moment, it's not really a currency because people are using it as a speculative investment. And the idea of a speculative investment is that if you buy something, you're only buying it so that the muppet behind you will pay a higher price for it. But what if Bitcoin, Litecoin, Ethereum, one of them, does manage to become a form of currency that people actually start using to transact value from me to you, and there's no bank intermediary? That's a real problem for national governments. And the reason is because unless the government knows what your Bitcoin wallet ID is, they don't know what transactions you're making. And it's not like cash, because people often say, well, they don't know about cash. But the government has control about whether or not they print cash in the past. And they have control about whether or not in 2008 they just made up money and gave it to the banks in order to shore up their reserves. They can't do that with a cryptocurrency. So if they're in a position where they can't control the supply of money, then they're not able to fiddle with interest rates, and they're also not able to get HMRC to confiscate your assets if you don't pay any tax. That's a huge problem for national governments that people really aren't speaking about at the moment. And what I write about in my book, A Letter to the Boomers, you get a free version if you sign up below. What I write about in my book is that if young people don't see any reason to invest in the institutions like the NHS, if we don't want to pay for national insurance because we don't think we're going to get a very good state pension because inflation is inflating all our earnings and our debt away, then why should we pay for these institutions that aren't working for us? My worry is that young people, the Zoomers and the Millennials, are going to opt out of using the Great British Pound. They're not going to use the pound, they're not going to use the dollar, they're not going to use the yen, they're going to use their own currencies. And that is going to mean that there's going to be a collapse for governments that have controlled this currency very poorly, I might add, and have promised a whole lot of money to a lot of old people. Please comment, and I would love to speak to a really, really smart economist about my thoughts. I do work in a corporate sector, and I know a thing or two about economics, but it'd be great to speak to a professor about this. So please like and subscribe. You get a free version of the book if you sign up below. And until next time, see you guys soon. Thanks. Bye-bye.